whoa, look at that company right there. It has such a high dividend. Should I buy it? I always say, don't make your decision about buying a dividend stock because of its dividend percentage. Welcome to Financialism. On this channel, we expand our wealth growth mindset. In the next few minutes, you're going to learn what a dividend stock, or dividend investor is. First, we're going to define all those terms. Then, we're going to break some dividend investing myths. After that, I will probably reference another video for you to check out. Then, I will reveal 2 signals to look for when buying dividend stocks that show that that stock is both safe and aggressive. Last, for those who watch this video all the way through, which I know is everyone because you know how important watch time is for building up a YouTube channel, it helps really push the video to others to see, because YouTube sees that it's something that people engage in and they enjoy to watch. And of course you're already doing that because you enjoy and watch it, and I see you guys, but you're not going all the way to the last 10 seconds when I do my funny little skit and you missed them all out. So go back to the old videos on the Flash Finance playlist, watch those last 10 seconds for the skit. So anyways, I'm gonna show you 2 ETFs, which is an exchange traded fund, ETFs that track dividend stocks. What this means is you don't have to pick and choose. So instead of buying individual dividend stocks, you're buying the whole block. If you're still a little confused about ETFs versus index funds versus mutual funds, you can click that and it will be explained really quickly in a couple of minutes. Without further ado, a dividend is part of the profit that a company has generated, except it's paying it out to shareholders instead of keeping it for itself. And a company that does this is known as a dividend stock, such as Coca-Cola or Johnson & Johnson. Now, a dividend investor is someone who invests in stocks for the dividend payout. Instead of looking forward to a stock going up in price, they focus more on the dividend payout. A great dividend investor is PPCIAN. He has a YouTube channel. I think there is an image of it popping up near me right now. I call him PPCIAN, by the way. I've always been doing that. I hope that doesn't offend him. He seems to have a great sense of humor, but more powerful than his sense of humor is his analytics of talking about why he buys certain dividend paying stocks. His whole portfolio is pure dividend stocks. This is not a paid advertisement or anything like that. I actually have been watching his content for close to 2 years. I consider him a really great YouTuber, but not just that. I think he is a great spreader of wealth. He is helping people build wealth, just like I am. I do look up to him when it comes to creating a platform that teaches others how to get their wealth mindset up. And he does that all through dividend paying stocks. He goes through his portfolio, like I said. And if you'd like me to go through my portfolio, I know I have that Charles Schwab video. I can revisit that because some amazing, marvelous things happened that include Oprah Winfrey. But anyways, getting a little bit sidetracked, let's get back to discussing dividends. So anyways, a dividend shows a strength that a company has, how powerful it is. So whether the market is going up or down, they are paying you a dividend. That is pretty impressive. Now, usually I don't do this, but this is going to be one of the first. I'm taking out my laptop and I'm going to break down a dividend myth for you right now. Okay, so a common misconception that people have when it comes to dividends is they look at the percentage. Now, normally when you're analyzing stock growth, it is fantastic to look at the percentage, because I don't want people thinking in terms of dollar amount, because okay, you have Tesla stock which went from like $200 to $1,000. That's $800. While you also have a stock like Overstock, which went from $2.60 or so to $22. Now, you'll be like, okay, with Tesla that's $800 and with Overstock that's $20. I prefer $800, but percentage-wise, Overstock made almost double the money than Tesla. So I hope that makes sense why I usually speak in terms of percentages and not dollar amounts. However, in terms of dividends, I will be speaking in terms of dollar amounts. It's the opposite when it comes to dividends. So right here we see that Coca-Cola is paying $1.64 for every share that you have. Right now, a share costs $46.77. If you buy one, eventually throughout the year, Coca-Cola will pay you $1.64. They usually break this down between 4 payments throughout the year, and they do this to avoid dividend hunting, where people buy stocks right before the dividend comes out and then they sell it real quick after they get that piece of the dividend. However, companies are really clever about this, and they usually don't reveal their dividend payout date until it's too late. You have to have held the company from a certain predetermined date that they have set. They usually will share it after the deadline has passed. However, not always the case. If you were buying Coca-Cola expecting a 3.51% dividend, if Coca-Cola went up to $90 right now, this percentage would change while the dollar amount would stay the same. That is why you want to think of it in terms of dollar amounts. No matter how much the stock costs, you will be getting that dollar amount. So if Coca-Cola goes to 1,000 tomorrow, you're still getting $1.64, while the dividend percentage will change. A question that I get quite a bit about dividend stocks is, whoa, look at that company right there. It has such a high dividend. Should I buy it? I always say, don't make your decision about buying a dividend stock because of its dividend percentage. I know, kind of ironic, but we just broke down why the percentage may not be important. The dollar amount is important. But what's more important than that is this. The 2 signals that you should look for when buying a dividend stock for safety and aggressive growth is this. How long have they been paying out that dividend? Look at the last economic crash. I know we just had one in 2020, but if we go all the way back to 2008, you can check out companies like Coca-Cola. Were they still paying a dividend? Yes, Coca-Cola was. Let's go back even further than that to the year 2000 of the dot-com bubble, where a lot of new internet stocks actually peaked and then disappeared and got wiped out and vanished and never were seen again. Not a lot of people, by the way, thought that Amazon would survive. The second signal you should look at is, were these dividends being paid out with consistent growth? What does that mean? It means, have these companies increased their dividend throughout the years? There were wars, there were presidential assassinations, prominent figures dying, world in chaos. Isn't there chaos in the world? Just sometimes we pay more attention to it than we don't, but I digress. Looking more at how long that dividend was paid out for. So let's look right here. There is actually a list of stocks that have paid out their dividend for more than 25 years and increased it gradually. Okay, right here we got the Dividend Aristocrats. Their dividend yields are revealed, and again, we're paying attention to the dollar amount. And of course, we have their 3-year dividend growth increases. But I want to point out is that I'm using marketbeat.com right now for this, but this is not a site that I'm promoting or anything. I just Googled this and it popped up. There are, in my opinion, much better Dividend Aristocrat lists that reveal how long they were paying this out. But this site at least points out that, hey, this says all of these stocks have been doing it for at least 25 years. There's Dividend Aristocrats that have existed and paid out their dividend for 40 years. So let's check out some of these names. Of course, we have Abbott right here. Abbott is something that I recently invested in, and I did not invest in it because of its dividend history at all. I did it because the market was tanking and Abbott was underperforming the market. So Abbott is a company that has been around for a long time. It's one of the Dividend Aristocrats. Whenever I see one of these having trouble with their stock price, I go in. AT&T's on this list. I'm a little bit hesitant about AT&T because they've been using prison labor to get some profit, which is, a legalized form of slavery. We see Coca-Cola over here. Again, right here, I want to point out the 3-year growth dividend. It says 400%. What does that mean? 400%, isn't that good? This is not their dividend payout. This is how much they've increased their dividend payout. So if instead of $1.64, they started paying about $3.28, you can say that they've increased their payout by 100%. even though it's just $1.64 that they've increased. But if this number doubles right here, this $1.64, then they doubled their payout. Moving on, let's see if there's anything else interesting on this list. Again, I welcome everyone to go through these Dividend Aristocrats if you are choosing to invest in dividend stocks. We got Lowe's over here, a classic company. Lowe's has invested actually a lot of money into Black Lives Matter. It's an important cause. Their CEO is one of the few black CEOs, and the Forbes 500, which is again pretty amazing, and that word has two connotations here. But Lowe's is something that I bought for the same reason Abbott, my mom told me, but also when I looked at their price compared to the S&P 500, they were much lower relatively speaking. So I definitely hopped into Lowe's and I hopped into Abbott. I'm not going to show you my current returns on them. I'll save that for another video, but off the top of my head, Abbott is up about 35%, while Lowe's is up about 70%. That's right, in about 2 months, Lowe's is up about 70%. Again, this is one of the perks of buying stocks when the market is crashing. Do not wait for those opportunities. More money is lost waiting for corrections than during corrections. Do not wait to invest. Start now. Hopefully this video will help you get there. And if you believe that is the case, I appreciate you dropping that like and showing love in the comments section. Tell me what dividend stocks you own. I would be really excited to read that more than the average person. You have no idea how much excitement that brings into my life. That's enough for the Dividend Aristocrats. You have made it to the end of the video where now I will show you 2 ETFs that track dividend paying stocks. So right here we have ticker symbol NOBL. This is an ETF that tracks the top dividend paying stocks. This is the whole list of Dividend Aristocrats right here in NOBL. So if you're picking and choosing, I don't know which Dividend Aristocrat I should buy, they all seem fantastic, well, why don't you just buy them all? And you can do that for $69.18 currently. I want you to check this out. The dividend yield is 2.29%. However, this is a stable 2.29%. That is something important to note. The expense ratio is 0.35. That is a bit high. This means that there are managers who are advertising this ETF. Of course, I just helped them with the job a little bit. There are also people who are trying to, pay those management fees of buying and selling and tracking those Dividend Aristocrats and putting them into this ETF. Again, 0.35 is a little bit high, but it might be a very, very, very cheap price to pay for owning the Dividend Aristocrats all in one place. That choice is yours. Now over here, we're going to look at SPYD with an expense ratio. Again, if you need a little clarification on expense ratios, there is a link right there. I hope you enjoyed that video too. It's all about expense ratios and how they can actually cut into your profits, but if it's all you focus on, you may not have too many profits. So going back into the SPYD, we see that their dividend yield is 6.42%. That's pretty incredible. Again, earlier we mentioned we're not looking at the percentage, we're looking at the dollar per share, but because this is an ETF, it's a little bit harder to calculate because it is a combination of a lot of different stocks. Full disclosure, I do own SPYD. I do own them in my portfolio. They are not doing well, and I will explain why in another video, the dangers of buying dividend stock. Look right here though, 25% down year to date, 25% down, even though its yield is 6.42%, which is almost 300% larger than NOBL, which just tracks the Dividend Aristocrats. What do we see here though? That 25%, right? This is because this is a whole bunch of stocks that are in the S&P 500 were all put into this ETF. So there's companies that aren't doing well, companies that aren't as stable or are long named recognized, while in NOBL we can look that the year-to-date daily total return is negative 9.8%. So yeah, stocks are not always going to be green. There's going to be times, there's going to be years where they're in the red, and that is fine. This is why this is a long-term journey. Right here we see though that the Dividend Aristocrats are much more stable. Again, we have companies like Abbott and Lowe's that are up 30 and 70% respectively since the whole 2020 crash has occurred. They help bring this average up, while the SPYD, there are a whole lot of companies that brought this average down. Now, hopefully that was a lot of cool material for you guys, and you are now more comfortable investing into dividend stocks, or you feel like, hey, maybe it's not for you, but at least you know about it now. If you enjoyed that video, I'm gonna balance this pencil above my upper lip until you click one of these other videos that are around my head right now. Okay, let's go.
Did you like them yet? Or do this for the views?
Hey, I'm pretty good. Aww.